It's great to have three outstanding persons here who have tremendous experience in that sector. Deborah, you worked for 14 years for Morgan Stanley. You are in Shanghai. You're working in an advertising boutique, and you're an investor in China. So I would like to discuss with you how China is. Olli Samwer, I think you're well known with Rocket Internet and your investments we talk about in a minute. And Martin, you have been a long-time consultant in that section and now running board of principal investments here in Munich with a lot of information. What happens? To bring some information in, I also would like to show you some charts very fast, 1 minute. Everyone who says venture investments, US venture investments, we are in a bubble. And if you see the numbers, and these are actual numbers from 2016, from the Venture Capital Association, you can see a rise, but we are far away from the 2000 investments from the year 2000 and 2001 compared to what is now in. If we see the figures from 16, this is new information. You can see that internet with 51% is very stable, getting most of the money, then mobile, then healthcare. So that hasn't changed a lot. It's very stable and comparable to the years before. Good news, Europe is catching up. Last year, the deal count by continent, Europe grew from the first quarter of 20% to 24%. But the most interesting part is this chart. It shows the money under management, and the latest figure you can see is the March 15 figure, that 200, this is a Pilgrim Performance Index. This is a real source. This is not fake news. This is a real source. And you can see that probably 3/4 of the value still waits for an exit, unrealized values. And it will be very interesting to talk to you how you see those figures, what will happen. And if it comes to performance of venture funds, then it's clear, something we have heard in the past, again, Pilgrim from 2015, that only the top quartile venture capital companies make money compared to invest in FANG stock. So Facebook, Amazon, Google, the last 4 years gave you an average of 31% up to today. If you see the performance, and you can sell the stock every day, here you go for long-term investment only if you have been with the top companies, with the top quartile, then you made the same money with investing into the top venture funds in America. So Deborah, let's talk about a bit of China. China is a very interesting place. You get quite a different view of information out of it. If you talk to people, you hear the people who have the venture funds who have been there very early, like IDG, like Excel, that they made tons of money. On the other side, you hear that it's very difficult to make money in China, because if you run a successful business and if you try to be influential, business licenses go away, the Chinese partners are tough competitors, and it is very difficult to make a great exit there. What are your views on China? How do you see that if investing in China? What are your observations?
I think there's a few interesting observations about China. One, if you talk about financial money going in and strategic money, and you're talking a little bit about kind of concerns about the businesses and their licenses and so forth. I think an advantage of being in VC money in China has been very much that you are not seen as political. So whereas strategic capital, maybe you have a worry about partnerships, the partners going away, the licenses disappearing, or the government kind of stepping in. I would say for most of the venture money or financial capital that's gone in, that hasn't been the case. And investing in the internet and the TMT space has been, again, in large part, has been an interesting ride for a lot of the US and foreign investors that have come into the market and been there for some time. I think what's changed in the market is a level of irrationality that has come in, and the fact that in last year alone, $300 billion in capital came into the market in how you might describe VC and the PE sector, and that came from the state.
Is the level rising or falling with this money coming in? The level of professionalism of the how they
well,
see it.
that's why I called it a little bit of irrationality. Is you suddenly bring in $300 billion in capital in a market that's had $30 billion in investments.
So it's falling.
It's falling.
It's falling, yeah.
And that's RMB money. So it's a little it's changing. I think in terms of the level of competition right now.
But that means for the future, so much money comes in, lots of investments will go down south to the toilet, probably. Probably yes.
Yeah.
Do you see real innovations coming out of China? Platforms, businesses, which you think... I mean, Jack Ma was on the stage in America 10 years ago. I think, Ollie, we both have been there in San Francisco. And Jack Ma was standing there telling, we come to America, we take you over. You can see it on the internet. Is there anything you can see which is coming from China that really makes that change?
I think China, for its own market, in particular in platforms, has done a phenomenal job, and nobody has been able to, from a foreign platform coming in, has been able to do a better job or to participate there. I think in terms of going out, what they have translated out are things like in the gaming industry, the whole way of monetizing and through microtransactions. That actually started in China and evolved coming out. I think payment platforms in China and in the use of Alipay is something that is developing more and more through Apple Pay outside. I think if you look at live broadcast and how that is being monetized through the gifting, that phenomena is really gone crazy in China and is starting to
scale globally,
to happen outside. So whether you describe it as innovation or a different type of way of monetizing a practice, some things have led from China and then evolved outside.
Okay, so, yeah. Thanks. We come back to later to Asia. Ollie, I think we had a great interview 2 years ago. I just wanted to show you. Can I get my chart, please? Here we are. So, Ollie, this is your stock price.
Oh, okay.
When we met in January 15. Here we had, I think we both hope you liked the interview as well. We had a great interview. And then something happened. Hopefully not because of our interview. This is Rocket Internet stock. And this is the market. Ollie, what happened?
Probably I haven't given enough interviews here, so I didn't come the year before. So I think let's look at it realistically. Rocket is a very complex company to understand. Basically, what's the number one ingredient of Rocket? You have to start companies from scratch. So basically, you have to all the time risk to fail. And obviously, in Europe, basically, if you start over and over again, you obviously fail a lot. And obviously, basically, that is something that's very difficult to explain. And so, since we are a company that has over 100 companies, I think you need to explain every single one of them, at least the largest ones. And I think when I meet investors today, some people or some investors, given that we have a large number of companies, still do not understand this is this company and this is this company. And so basically, I would say in the last 12 months, that's when you see the flattening out. We started to focus on less companies like HelloFresh, like Delivery Hero, like Global Fashion. And I think our goal is to make our way up again. Yeah, I think if you look at the underlying companies itself, they grew revenue by 30, 40, 50, 60%. We reduced losses by over 50%. And I think if you look at many of them, they're on their way to pass the profitability. So I hope maybe in 2 years or 3 years from here, we sit here again and we probably are at a higher valuation.
But we had a discussion 2 years ago. Does it make sense to have so many brands in a listed company? And isn't it easier just to have one brand and to scale that, like Zooplus, like Zing, like other European or German companies where we have invested in? Would you say now after 2 years, it still makes sense to keep rather a broader view with more companies and you keep with your business model for another 2 years to scale?
I think you try the new thing. And I think basically we 100% believe in our business model. Basically, we even extended it by investing now in third-party companies over the last 2 years, almost over $1 billion. I think time will tell. In the end, it doesn't really matter if you have 1 or 10 companies or 100. You just simply have to perform. And I think that's what we have to do and to communicate to the market and to explain well.
And you're positive on the next 2 years that you think, I mean, markets are markets, but if it comes to business model, what you're saying, you hold to your business model, you think it will grow in the next 2 years. Is that what you're saying? Or?
I think what we told the capital markets, yes, in the next 2 years, we're going to continue to make progress, meaning to reduce the losses, to continue growing, to have a strong balance sheet, and to reduce complexity.
Okay. You're here not as CEO of Rocket Internet, but as European Founders Fund. That is how you enrolled here. How do you differ your 2 jobs you have, one for the fund and one as CEO of Rocket Internet? Can you describe how you differ those kind of jobs, how you take them apart?
So one is basically the incubation unit, and one is the venture arm of Rocket. Yeah, the money comes from 2 sides. The venture arm, roughly 1/3 of the capital, more or less, comes from the Rocket balance sheet. 2/3 comes from limited partners, like any other fund. And it's a very different team. We have offices in over 7 cities in Europe, but also in the US and in Asia and Africa and Middle East. And we make investments. If you look at it, basically historically, maybe Delivery Hero was our largest investment. It came from Rocket because we didn't have the venture fund at that point of time. But we've made over 30 investments last year, and we are on our first 2 or 3 this month, and we feel very good about it. We made a lot of investments like Border also in the UK. We made investments in America.
But don't you get from your investors of Rocket Internet just the call to focus on your CEO role, spend your time there, just fix it, instead of being dancing on 2 floors?
The more we're successful in our fund, the more money we're going to create for our shareholders too. So basically, it's not my private organization, it's a Rocket venture arm. So basically, everything is very clear about shareholder value creation. And
it goes in one pot.
Yeah, if you look at it, in the end, my investors don't care if we make a lot of money for them through incubation or through investing in the right company. And I think you can do both ways. I think you saw Christina today from Kinnevik, I think. She made a lot of money by investing at the right point of time in Zalando and supporting the company in the next stage. We by helping to support it from the very beginning. It doesn't matter.
And just a sentence, you said, Rocket Internet strategy is clear. You made that clear what you do, reduce costs, grow them, and work. Where is your focus if you invest, 30 investments you have made? In which sectors are you looking? Where do you think is the next big thing?
So just as we liked e-commerce in the past, we like very much kind of to help to disrupt the banking industry. So fintech, I think, is definitely a very big space. We've done over 10 investments recently in Funding Circle, which is basically Europe's largest fintech company today. We've been an investor before. We increased our investment. We are making investments in many parts of the world in fintech. I think we still look for old traditional models like marketplace. Very interesting is e-commerce if you also have the manufacturer margin. It's called direct to consumer, manufacturer margin plus retail margin. But I think we stay very open. We also made over 10 B2B SaaS models. I think, in 99, our first company was similar to eBay. Then we did logistics. We did it all over the world. Now we do fintech. I think whatever makes sense.
And the region, where are you focusing from your investment now? 2 years ago, we discussed not going into America. Some rumors said you're going into America with investment. Where are you standing there at the moment?
We love America. I think
that is clear news.
I think we are very successful on both sides. We have a company that we helped to start called HelloFresh that's very active in America, and it's a large market, and they are doing tremendously well over there. So in that sense, we have our first bigger business in the US. Secondly, we also made investments, so maybe 5 or 6 investments. And a long time ago, we also invested in US companies like Facebook, LinkedIn, Zynga, Eventbrite. So I think different to 2 years ago, we made our first steps in America and we feel very positive about it.
Okay, thanks, Oliver. Martin, as we have seen, venture capital is a terrible asset class if it comes on net IRA and returns. So why do you waste your time investing for Boda into early stage?
Why do I waste my time? That's a really good question. Look, I think the figures that you've showed about venture capital as an asset class in total are indisputable. They are what they are. It's an incredibly humbling experience to be losing money. I don't know, let's do a quick show of hands. Who's ever invested money in a company and had a complete write-off? Okay, so you know what I'm talking about. It's an incredibly humbling experience, and it's a very, very good starting point. Humility, I think, for a long-term investor is probably a very good attitude. Now, if you look at the asset class as a whole, that's an average. Look, if you have a hospital and the average temperature in the hospital for all of the patients is 38 degrees, that doesn't mean that every patient is mildly ill. It just doesn't really tell you a whole lot. What you want to know is about segments, and I think that's what you need to do in venture capital. You need to drill deeper and see which of the segments are really, really interesting. There are areas that are interesting, regions. There are stages of investments that are interesting. There are certain business models that are interesting. And I think for us, as we're Hubert Burda Media, we're just a small Mittelstand firm, so we can't do everything for everyone all of the time.
So where are you looking
focus.
into? I have to tell you, it's a bit of a funny thing because Martin and I have discussed the strategy, but for all of you, I make sure that you have the real experience by asking real questions. So Martin, my question to you is, where are you looking? In which section are you, which section of the world, which industry are you looking for? Going to America, like Oliver as well?
He was really looking forward to this because about 10 years ago, I was on the supervisory board when he was the CEO, and he came with this great idea of a doctor rating platform, and I tried to shoot it down. Of course, that company is Yameda. It's hugely successful today, and I was wrong and he was right, so he really enjoys this. Let's get to the segments. There are basically 2 things that we focus on as Burda Principal Investments. The first one is the stage of investment. In Europe, there is a very clear gap for internet investments in the size of 15 to 25 million. On the seed money, on the Series A, you have a really well-developed landscape. If you then talk Series C and later, there's a clear gap in the market. And if you look at the Series C investments last year, globally, 85% happened in the US. If you look at seed investments in Series A, over half of them happen outside the US. So 2-3 years down the line, you're definitely going to have a really interesting segment there. And the second thing is, we stay away from about 85% of all investment topics that we know absolutely nothing about. So a lot of the things that we're actually talking about at DLD, we wouldn't ever dare to invest. There are much better investors out there to talk about AI, to talk about robotics, to talk about autonomous cars. What we focus on is consumer internet, something that fits the Burda heritage and the Burda brands. And what we focus on is marketplaces and content-related commerce. Out of the 10 investments that we've done over the last 18 months, 3 alone have been in marketplaces for social and fashion products. And that is exactly what we do.
What is the reaction of founder teams if you approach them? I mean, many founders say, if I want to do a financing route, I just go from the top. I would like to have Access, Sequoia. I mean, all the names. Yeah. Rocket Internet, of course, here in Germany. What kind of reactions do you get from founders if you approach them, or teams, you approach them saying, Boda is here, can we help?
The feedback that we usually get is very positive because usually it's not us reaching out to them, but it's them reaching out to us. So all of the firms that you mentioned are absolutely fantastic venture capital firms, and we don't see them as a competition because they are usually a lot earlier in the stack. we really see them as partners with whom to co-invest. So we've done 3 co-investments with Excel, we've done work with Union Square Ventures, with Chicago Ventures, with Greycroft, we're now co-invested with Index, with 8 Roads. So these are all partners for us, and I think what you see is that the strategics have a lot to offer in terms of actually managing businesses.
But if it comes to an exit position, I mean, the big disadvantage, only if you do a funding, or Deborah, you're investing in China, you just have financial institutions working with you together. You have a big advantage because they're all in the same incentive way working. They want maximum money out on an exit, if it comes to an exit. I mean, what do founders tell you if it's, you know, well, strategic?
I think you're raising a really interesting point. If, as a corporate venture arm, you want to be a successful investor, you need to be happy to get dragged out of investments. Otherwise, the guys don't show you the good deals. Otherwise, you just get stuck with the stuff that they can't get rid of, and that is, of course, not what you want to do. Therefore, and this is the reason why we set Bird Principal Investments as a separate entity and as a separate fund. We are measured on the capital returns that we do, and if we are in companies and get dragged and make a good return on that, that is perfectly fine. We don't invest only to keep in the long term.
Okay. Deborah, coming back to China a bit, and then I also would like to open the question to you if you have any questions. Interesting discussion. You said there's so much money flowing into China. Well, last year in February, I mean, you see stock markets collapsing because everyone thought China is in big trouble. People brought tons of money out in 2016.
Right.
Everyone who's a Chinese, who has money, tries to export his wealth. We see Bitcoin has a lot of effects from China. Why invest into China right now? If the Chinese themselves try to bring as much money as possible out of the country?
Well, I think you have to look at the reason why the money is going out of the country. I think it's a few-fold. One, you have foreign exchange. Everybody knew the currency was depreciating over the course of the year. And so people were trying to get their money out ahead of that. That was sort of one driver. Secondly, there was a lot of strategic activity or rationale for a lot of the outbound activity that did take place. Thirdly, there are some concerns about, keeping your money perhaps outside of China as well as inside. But I would address all of those macro factors really don't change the opportunities in China in terms of what is developing. I guess a fourth factor would be the pricing and the cost of things in China. Increasingly, a lot of the venture and PE firms were finding that actually buying the similar assets offshore were cheaper than buying it onshore, largely because, again, the competition from onshore had enormous A-share valuations and a very low cost of capital. So all of that drove much of the 2016 outbound investing activity that took place. But again, I think you saw some very interesting opportunities happen in China, whether it's in fintech, whether it's in sort of the we media or self-expression areas, and quite a lot of M&A activity domestically took place. So you had great exits for a lot of the investors over the course of 2016. So I don't think many of the fundamentals in the TMT sector in particular have changed that much. But some of the macro factors, definitely had it.
But if you look at the future now, you're operating out of Shanghai, you're in China, you're really on the ground. If you would say in 10 years' time, valuations, just a guess, on China, overall valuation of TMT companies, what will you say from today?
I think you're looking...
It's just a guess, just to understand, what do you think?
I mean, you're looking for a 10x return.
10x.
Yeah.
So even if so much money comes in, you're still a positive and think it's still...
I think long term I'm still positive. Yeah, this year's going to be a tough year, but I think long term, absolutely positive.
More volatility in the market.
Absolutely.
That's the result for the next 10 years. And you think China will stay stable with all the democracy questions which are in the country. From your perspective, 10x only works if you have a stable society.
Yes, but I think that's politically, I expect stability. I think it's much more, they're going to be managing blips in terms of, foreign exchange reserves, in terms of the stock market performances and the amount of money that's flowing in. they're going to have to manage all of this. But I think long term, absolutely.
10x. Another country in Asia, you would say, this also could become a burner. Because you're advising lots of companies throughout Asia to where to invest.
Predominantly in China, but yes, yeah. Listen, I think you have other interesting markets. Indonesia is another such example. That's an interesting market going forward. Southeast Asia has been in many ways ignored. And I think from a venture perspective, there's some interesting companies emerging there. Rocket has one that's done very well.
Okay. Any question from the folks? We have mixed mics. Who has a question? Where's the question? Okay, not question. Is there a question? I didn't see it. Patrick Martin.
Is there a lot of new technology emerging that's going to come to the West out of China?
I think what I think you're seeing is China has been known for copying, right, the rest of the world and bringing it into China. I think what they believe they do with it then is they localize it and they make it work for China. And so whether that means how they monetize, how they attract the consumers, these elements, so as I talked about earlier, whether it's microtransactions, whether it's gifting that has taken place, I would say a lot of the monetization elements are unique to China and that are being exported. From a pure technology perspective, and I will caveat, I focus much more on the consumer or content side as opposed to the really hard technology, perhaps less so. I think maybe there's some gaming components that come out, but I don't see, from the perspective I come from, I don't see huge technology developments as of yet.
One final remark from each of you. Martin, you can start. Venture capital in 5 years is?
A lot more corporate venturing. Corporate venturing today does about 25% of all deals worldwide, and I think corporates have a really spotty track record in venture capital. I think they've really cleaned up their act. There's now 176 corporate venture arms globally that are investing. About 80% of the money that is being deployed is going into later stage and growth, and this is, maybe it's just my sort of the German heritage, what we have in the blood. We're engineers. We like to see the screw turn. And that's what we do, and I think that's what we're actually good at.
Oliver, venture capital in 5 years is?
A lot bigger. Yeah, I think, and B, it's the same business as today. You need to find the right companies. You need to back them, probably not only in seed and Series A, but as was mentioned, basically we have a real gap of funding companies for 10, 20, 50, 100 million, so along all the life cycle. And I think that's what we focus on with having a very large fund and a very large balance sheet.
Deborah, in 5 years, venture?
I think what will be interesting is the source of capital. I think today we think about venture capital as coming out of the United States or out of Europe, and I think you're going to see a very significant portion that's invested globally coming out of China.
Thank you very much to my panel.
Thank you.
Thank you very much that you have been here.